Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. And before we take a look at the markets, I wanted to let you know that we have a 2-week free trial for our ECS Live service with live analysis, live setups, and also live webinars. So if you're interested in that, check out our article. It explains how you can join the Telegram channel and how you can benefit from our 2-week free trial. All right, traders, let's start with this euro dollar. This is the 1-hour chart, and we did get a follow through to the upside. We were looking at a potential bounce at this fib, and we got the bounce at the 38.2 fib at 112.25, and one more higher high that indeed challenged this resistance zone at 112.50, 113.25. So the wave 4 and the wave 5 we got, and look at that rejection at the resistance zone. And if we look at the daily chart, and you can see also, by the way, price nicely going to that minus 272 target, by the way, of that wave 3. If we look at the daily chart though, look at this wick and look at the close, very near the low. So we're getting a pretty substantial rejection daily candles at this moment. And I think that based on this, it looks for more downside for the moment. Bearish expectation at this point, considering yesterday's bearish engulfing twin. And that would mean the 5th rejection at the 144 EMA. 1, 2, 3, 4, 5. We already were explaining that down in here, that this could be an ABC up, and that could be a part of a correction, and price might move up to the long-term moving average, but that could also be a very likely bearish bouncing spot. All of that happened. We got the double bottom. We got the double bottom basically, and then the 88.6 fib, and right up to that long-term moving average, as you can see. So it looks like a bigger correction has been completed here. Personally, I'm now leaning, now that that bullish ABC is finished probably, I'm leaning towards an ABC down. The only thing that would invalidate that in my mind, just like we were saying, you know, a bearish candlestick below 111.18 would invalidate the upside. A bullish candlestick pattern above 113.25 would invalidate the downside now. So the roles have flipped, moving from bullish outlook to bearish outlook on the euro dollar based on the fact that price has hit the resistance zone, but also reacted with a very strong candlestick pattern. Unless, as I said, price with a bullish close above 113.25, that would throw this out of the window. In that case, we're looking at, a potentially huge breakout to the upside. So if that happens, I'll be very interested. But I need to see that happen before this becomes likely. Otherwise, downside, in my view, is more likely based on all these things we just discussed. So for our chart, we are seeing the potential for a bullish bounce. Although I'm bearish, there is a potential here for a bounce. Why? Because it's at the 21 EMA, okay, and the previous top as well. So that could indicate some bounce. Now, let's see how it bounces. If it is choppy, corrective, looking like a bear flag, then we have a lot of arguments for some more downside. We have the head and shoulder. Besides the things we mentioned on the daily chart, we have the head and shoulders pattern here, left shoulder, head, right shoulder. We have then a bear flag, and the break of that bear flag should send us lower. We have also quite good momentum here. This could be a wave A, a wave 1. This could be then a wave 2 or B, and then down it goes for a wave 3 or C. All right. So if we put a fib from here to here on this piece of momentum like that, then, for instance, the 50, 61, 38.2 fib, anywhere between 112.50 and 112.75 could be a resistance zone, and I could send it down back to, for instance, the minus 272 target at 112, minus 61.8 target at 111.65, minus 100 target at 111.32. All right, so that's what I'm expecting. Unless there's strong momentum like this, breaking through the 61.8 fib zone here with strong momentum, and then we see some bull flag. If we see this, that could be worrying for the bears. In that case, I would not short it. I would be back into neutral territory, just waiting to see what happens if price breaks to the downside or to the upside, perhaps. All right, I would just wait for that. I wouldn't be trading either way at that point. Okay, so that's the euro dollar. Pound dollar, I think, has hit a bigger resistance zone too. We were waiting for this move up to finish 127. Seemed the most likely target, but in extension to 127.50, 127.75, the long-term moving average, all of that was still within that possibility, was still within that resistance zone, and also a zone that could cause a bounce back down again. So all of that was part of probably a bigger ABC correction within a bigger wave 4, and we're expecting pound dollar to continue with the downtrend within the wave 5. So yesterday we got the bearish engulfing twins. We got a rejection somewhere around 127.50, 127.43-ish to be precise. Bearish engulfing twin here. So that could already be one potential reason for price to, as a confirmation of a bounce or a reversal. The second would be a break below the 21 EMA here. If we get that, then I think we're looking at a pretty good chance of downside. For those that use SWAT software and indicators, you can just wait for a red candle with a red arrow like this. Or if you don't get the red arrow, you can wait for the second red candle to confirm the breakout. All of that is possible with SWAT software if you're part of the SWAT membership. And if you're interested in that, you can always check out our website, of course, where you can see how my course looks like and what is offered with that. All right, that's elitecurrency.com. So looking for a breakout, or on the hourly chart, we might see a bounce here and the same pattern: head and shoulders, left shoulders, head, right shoulder, and then looking for the second break below the 20 EMA. All right, would also be a way of tackling that. So waiting for the bounce and waiting for the re-break below it as price goes below the 21 EMA could also be another approach. For the moment, price is breaking below this support trend line, and it seems to have made kind of a rising wedge a little bit, at least a little bit of that reversal pattern it has in it. So if it does make something like this, or if it does look choppy and corrective as well, just like the euro dollar, another reason to look for downside. If price, for me, upside is only interesting. I don't see any. No, actually, I don't see anything at this moment. It would really have to break probably above 128.25, maybe, with a good daily candle close, something like this. A daily candle like that. That would change perspectives, and we might then look for pullback continuation. Now, keep in mind that tomorrow is NFP in the US, Friday, so that's a big news event that could send things in either way. But if my analysis is correct, NFP will probably send it lower. But let's see. Time will tell. Time will tell. If we do get on Friday a candle like this, well, then throw out that bearish scenario out of the window, because of course in that case we're looking for more upside. So far, the daily candle, just like the euro dollar, has a bearish wick 2, bearish candle close, pretty good pin bar. Although it's not a reversal pin bar; it's actually a kind of a continuation pin bar in the sense that we have momentum. This is pullback, but considering the strong momentum in the daily chart, so many candles below the 21 EMA, this is likely to be a resistance zone. If not now, then after a few days, as it goes sideways, then I would expect a break and continuation. All right, more updates you can find at, of course, elitecurrency.com if you've signed up for our free trial. Hope to see you in that channel. And above all, wish you good trading. Talk to you soon. Cheers.